From Harry Hurley Way in the world's playground to the broadcast pioneers of Philadelphia Hall of Fame.
I want to congratulate my friend, Harry Hurley.
You're about to find out why Harry Hurley has been named to the Talkers Magazine list of the 100 most important talk show hosts in the nation. Live from the studios of Town Square Media in Northfield, it's Hurley in the Morning on WPG Talk Radio 104.1.
Hey, thanks very much. Welcome back live from the Atlantic City Aquarium. Hurley in the Morning here. Thank you, Kirk Conover, for a great first half. Chuck Malamut is here. He'll begin with the market update in just a moment. Just a reminder, we're at 800 North New Hampshire Avenue in the World's Playground at the wonderful Atlantic City Aquarium in Gardner's Basin. Plenty of available parking if you want to stop by. In the next couple of hours, we have a lot of nice guests. After Chuck leaves us at the bottom of the hour, Lisa Shaw is going to join us at 8:30 this morning, right after the 8:30 break. We're going to be talking about the Mysteries of the Ocean educational exhibit. To give you an idea how cool this is, this was conceived by Miss Kelly Hunt's fifth grade gifted and talented students from the Dr. Joanne Miller School in Egg Harbor Township. They came up with a great idea. The Hurley in the Morning charity stepped up with the funds necessary to make the idea a reality, and today is the day the fruits of everyone's labor, the folks that conceived it, the people that put the exhibit together, and of course all the great contributors to our Hurley in the Morning charity that made it possible to make the funds available to make the exhibit happen. The Mysteries of the Ocean educational exhibit will be unveiled approximately 10:30 this morning at a press conference event that's going to be taking place up on the third floor where the exhibit is housed. Chuck Malamut, I know that obviously the Trump rally continues. I'm very happy about that. Give us the market update. What's happening? And
morning,
welcome
Harry.
to our remote studio with Nicole and Hurley in the Morning.
Nicole, Harry, good morning. Yeah, it's
Frank's your son.
I
Your brother
understand
Harry.
that. Yeah, I get that, Harry.
Okay.
But
to be called your son is very high compliment.
Yeah, thanks, Harry.
Thank you.
No, it brought back memories walking in here and seeing the bell from the steel pier.
Isn't that great? The diving bell's right out front.
It's amazing that it seemed so big back then.
It did.
And I looked at it on the way in. And I said, "Wow, it's actually
small,
quite small on a comparative basis." I can't imagine. I mean, obviously, it goes back many, many years. How many people did they stuff in there at a time?
It seemed like a lot, probably 10 or more. Going down nice and slow, and you saw seaweed, and you saw the difference. The ocean was always seemed very, very dark, and coming up was just such a rush. The way you just flew back up to the top.
And it was something just driving through this morning, seeing, the redevelopment of this part of town and the finishing of the boardwalk will be something special. I was, quite pleased when we came into town on Saturday night to have dinner with friends, and the town was packed.
Atlantic City's doing much better than the headlines will tell you.
It's really sad that Atlantic City's not getting the press that it deserves. It's like anything else. It's that negative news that you continue to hear about. But there are obviously a lot of really great things going on. Now the mayor is on with you.
He's coming on. But he's going to be here a little bit later this morning in the 9 o'clock hour, and then we have Ask the Mayor tonight in the 6 o'clock hour.
I'd be interesting to listen to the mayor at that hour with you in light of everything that's transpired from the last time that you were together doing Ask the Mayor.
Well, think about it. We have the successful ballot question, which could not have gone better, 80 to 20% just thumping of that. Atlantic City, and we had the first exclusive interview, as you know, Chuck, with Jeff Chiesa, the new chief executive officer for Atlantic City. So now that is in place, and they've had meetings. He has met with the mayor. He has met with members of city council, and they're putting together what the plan is going to be going forward. I thought one of the most important questions that I was able to pose, and now this is just accepted as self-evident, but it wasn't until we posed the question in our exclusive interview last week, and that is, what will the role of the mayor and council be? Because a CEO that wanted to come in like a dictator could have taken everything from them. But he made it clear that the mayor and the city council will run the day-to-day operations. So this makes it more, to me, Chuck, like it's a partnership and not some
certainly more palatable,
occupied state.
And an effort to, get the city back on track. I mean, the question and the elephant in the room is the debt. How do you overcome this much debt in a relatively short period of time?
I'm not asking for a finite plan, but how would you, with all of your experience as a hotelier and all of your experience for decades as a great financial consultant, financial advisor, how would you rectify more than $500 million in structural imbalance?
Well, Harry, I'm not so certain that with the ratables where they are and the revenues that the city collects, and that they're going to be able to overcome that burdensome debt. I mean,
because you still have to run the town.
The bottom line is that this is, no matter how you slice and dice it, I mean, it is a resort, and it requires the infrastructure here is certainly different than what you're going to find in a town that is, not a vacation resort, but what I'll call a Central Jersey, South Jersey, mid-state type city.
So unless the state was going to offer funding that would be part of a payback type program on the debt, I don't see them also generating enough revenue to pay for city services and to pay the debt down.
I think
doesn't that mean they're going to have to discharge the debt in another manner?
Harry, one of the things that we've talked about on multiple occasions is, Atlantic City debt, Atlantic City GOs, general obligations. It's from a municipal bond buyer, a GO or general obligation in the capital structure is a lot more secure than the revenue bonds. For instance, like a New Jersey Turnpike, Garden State, Parkway, New Jersey Educational Facilities Authority, that collects their revenue from a dormitory or a school, college, for instance. But GOs in the capital structure are certainly a lot more secure to the investor. Now, I think one of the things we chatted about on a comparative basis, Atlantic City debt, if I ran and the inventory that's available to purchase, and I sorted by yield, the highest yielding debt is going to be the Atlantic City debt. So that means that the buyer is prepared to collect a higher rate of return, assuming they get their principal. Now, if the bond is selling at 75 cents on the dollar, and it has been downgraded multiple times, and the question is, are you, as the investor, prepared to collect your interest and then ultimately maybe not collect your principal? And
except everything we've ever seen in the entire history of this type of situation, now we've never been 500 million plus in debt, has always been to pay in full, which always made me wonder, why was this ever considered a risky investment when the desire of government at the highest levels has always been to make sure that investors get paid? No investors get beat typically. I know there have been bonds in certain casinos and things like that where obviously...
No, there's been municipal... Look, Harry, there municipal debt out in California.
No, I'm talking about I'm only talking here.
Here, okay.
Yeah.
No, your assessment is correct, but
yet people sign on to this instrument and earn a yield based on the fact that there is certain inherent risk that's really never been there before.
No, but Harry, there are significant inherent risks.
Well, if it were left to the devices of the free market, but when they never let it go bad, is there really any risk?
I think.
Get what I'm saying?
I understand, Harry. A traditional municipal bond buyer is not buying a bond based on that premise. They're buying the bond on the premise of collecting an income stream, and on the maturity date getting their principal back, or on the call date getting their principal back. An investor that's looking to buy municipal high yield, this might be more of an appetite for them. But the bottom line, and Mayor Guardian's talked about it, and you've talked about it, is you have an ongoing discussion of reduction of your payroll. I mean,
But as I said to Chiesa last week, you could cut every employee in the city of Atlantic City,
and you still wouldn't be where you need
correct.
to be.
So it's not only you cannot cut your way into prosperity. This is a process of managed cuts so that you keep city services high, to the degree that they should for the amount of money that people are spending on city purpose taxes, both school and city purpose side, and then also growing out of it with additional revenue. Yeah,
so an investor, obviously, the way the bonds are marked to market, I mean, it's no secret as to what is happening here, and I think what's very, very encouraging is as I drove into town this morning, one, the amount of traffic and
Yep.
people coming to work, and as I mentioned to you over the weekend, the town was busy.
Yeah, it's good.
And so the key is we get through these. If you remember, the right before as we lead into after Thanksgiving, before Christmas, it's relatively quiet, and then you have that big rush right after Christmas into the New Year's holiday, and the question is, how are you going to, make it, so to speak, in those really, really difficult months, January and February.
15 minutes past the hour. We're going to come right back. Chuck Malamut, he's only here for 30 minutes this morning because he has an appointment to get to, and obviously we're not in studio this morning, so Chuck has travel time that normally he doesn't have. When we come back, I know I want to give Chuck an opportunity to do there's a great market update to give. I mean, we've got a triple play, the likes of which we haven't seen since the late 1990s, it looks like. We'll get to that. But also, guest listener Bob wrote in to our remote Hurley in the Morning studio here at the Atlantic City Aquarium if I would ask Chuck how investors should position their asset allocation for a booming economy, 4 to 5% GDP. Bob says, I would think that the undervalued energy sector may be a good play, and real estate in the South Jersey shore towns, given the dangers of inflation in a booming economy. I think he would agree that bonds and cash positions are problematic going forward. We'll see if Chuck agrees that they are problematic going forward as we continue. Hurley in the Morning live from the Atlantic City Aquarium. Thank you, Glenn. 20 minutes past the hour. Hurley in the Morning live from the Atlantic City Aquarium. And there's a big presentation that's going to take place, press conference, unveiling of an incredible new educational exhibit. We'll talk more about that with Lisa Shaw coming up in about 15 minutes. We have 10 minutes left with Chuck. Chuck Malamut is here, our official financial advisor to the Hurley in the Morning program, made the trip all the way to historic Gardner's Basin to the Atlantic City Aquarium to talk about your financial matters. And we're going to get into the market update, but I want to give Bob's question a fair airing. Harry, can you ask Chuck how investors should position their asset allocation for a booming economy, 4 to 5% GDP? I would think that the undervalued energy sector may be a good play, and real estate in the South Jersey shore towns. Given dangers of inflation in a booming economy, I think he would agree, meaning you, Chuck, that bonds and cash positions are problematic going forward. Your thoughts?
Well, Harry, a great question Bob posed, and actually something we were going to chat about as we had it on our agenda today. I still think you need to have an asset allocation in check. You really shouldn't deviate from that. And, as we talked about being a bond buyer, before the break, if you have an opportunity now to buy fixed income 50 basis points, 100 basis points higher than where it was, say, a month ago, whether it's a good quality corporate or it's a really good quality municipal, I would not be adverse to doing that. You have seen a structural shift, Harry, in the last couple of weeks, where money has left fixed income. They're saying that the rally's over. It's been sort of long in the tooth, but the money is now for the first time moving into equities, and I think the whole discussion of active versus passive management is something that we adhere to all the time. When we construct a portfolio, because we want to make certain that a portfolio that does have active management and also has passive, the index funds per se. But I think there's 6 different sectors that we should be looking at as we get into the Trump presidency. Bob mentioned energy. That is one. For sure. The banks. You've seen a significant rally in financials. And 2 weeks ago, Harry, financials were the best performing sector of the S&P 500. And we think, if interest rates move higher, then that's going to, in fact, continue. U.S. infrastructure, both President-elect Trump and Hillary Clinton were both advocates of repairing, the very, very old, dilapidated infrastructure that we have here in our country. And so that we think that's going to obviously continue. This is where it got a little bit different, defense and aerospace. Clearly, Donald Trump and his administration so far has signaled that that's something they're going to concentrate on. And last but not least, certainly different from what Hillary Clinton was thinking about, biotechnology has been literally on a tear from the time we elected Trump, and last but not least, pharmaceuticals. So
I know, Chuck, we talked about this a little bit last week, but why do you think it is, because it's still continued even into the next week, that when the markets initially did not want Trump, why so fast have markets rallied?
Harry, I don't think that the market didn't want Trump. I think
they said they did.
Well, no.
They said they didn't.
Well, look, as you and
known versus the unknown.
No, as you and Kirk had talked about earlier today, and we've talked about in the past, obviously like that.
I always believed everything he was saying markets would like. He was talking about lowering taxes on individuals, lowering taxes on corporations, going after those trillions of dollars. We still don't know how much it is, but it's in the multiple trillions that's been parked in other countries, finding a way to bring that and putting that to work, repealing and replacing Obamacare. His blueprint, I think it's obvious to me why markets should have been rooting for him to actually win, not waiting for him to win, say something sobering, and then like it.
Well, exactly. But I think, Harry, the problem was because what he said and how he said it, obviously offended a lot of people, and they weren't quite certain as to where he was going, as we got up to that Tuesday election. So now, as we move forward, the markets obviously have been very, very pleased. Last week, the S&P, was up again. We're up almost 1%. Telecommunications and financials led the rally. Healthcare, consumer staples lagged, and this is all sort of in that Trump theme, so to speak, as to where we think the market's going to go. So you think about it. There's pro-cyclical sectors outperformed, defensive areas have lagged. Utilities, utilities are kind of linked to fixed income. We think these trends are going to continue, given what is happening with the economy, and I know that you might take a step back when you take a look at October retail sales. They were up 0.8%. The projection was 0.6%. Weekly jobless claims fell to 235,000. That's been the lowest level we've seen since 1973. So what is happening, even before the election, a lot of this was, sort of the groundwork was being put in place right now.
Do you think, we won't know this, but do you think there would have been a similar rally had the other candidate won? I tend to believe, as a layperson, but you're the expert, that there would not have been. I think initially we would have had an up day or two, but I don't think it would have been anything like what we've been seeing.
I think you would have had that relief rally that she was elected, and then ultimately I think the market would have rolled over, and with the thought process, more of the same for the next 4 or 8 years is really not terribly inspiring for our country. So you and Kirk had talked about this. We had talked about this. Lower income tax rates for individuals and also corporations. So if the corporate tax rate is cut, that's going to provide a significant tailwind for stocks, because what will happen is it'll give companies the ability to have higher after-tax earnings. Some of the things we talked about, a higher top line, higher bottom line, we're starting to see that now. There were a few reports this morning that came in higher on both sides.
What are holiday sales forecasts looking like?
Actually looking to be pretty good on a comparative basis.
That's positive. 2-minute drill, closing comments.
So here's where we are, Harry. You look at the S&P, the Dow Jones, the NASDAQ, up anywhere from 7.5% to 11%. the clear winner now, and it's all happened in a relatively short period of time, your small caps, the Russell, in this case, the Russell 2000. Europe is still, an unanswered question. I think that, you can tread very lightly, but I think there is opportunities there as well. From the fixed income perspective, rates on a relative basis are still not high. I know that you talked last week with Jim about higher interest rates. In the mortgage world, I think that is going to it's going to knock out a number of potential buyers. So there might be some issues with those that are sort of on the cuff, so to speak, and not being able to borrow. I think that could have an impact with some real estate, but I think commercial lending will continue. And I think we sit back a year from now, I think your listeners will be relatively pleased as to where we are.
For all of your financial planning needs, turn to the exclusive financial advisor for 26 years, the official exclusive financial advisor to the Hurley in the Morning program, Hurley in the Morning charity, Chuck Malamut. You'll learn about his team and his team's perfected concept of total asset management, coupled with that all-important asset allocation, which, responding directly to Bob and Kate May's great question, you learn a little bit about, how Chuck works very, very well with you and yours. 609-383-2010 is the number to reach Chuck. When we come back, we're going to talk about the Mysteries of the Ocean educational exhibit. It's why we brought WPG on the road and the Hurley in the Morning program. Nicole Alexander, Hurley in the Morning, here with you in historic, beautiful Gardeners Basin at the Atlantic City Aquarium. I'll be back in studio tomorrow, and then Nicole and I go back out taking WPG on the road for the 88th annual Atlantic City High School, Holy Spirit High School Thanksgiving Day football game. Our coverage will begin at 8 a.m. That'll be my repeat of tomorrow's interview with both the Atlantic High and Holy Spirit programs. We've been doing that every year for almost 2 decades now. We replay that at 8. We will begin, Mike Gill and I, our live pregame show at 9, and kickoff will be at 10. All of it from Absecon, New Road, Holy Spirit High School at Ed Burns Stadium. We'll be back with Lisa Shaw from the Atlantic City Aquarium when we come back in just a few minutes.